Larry Tentarelli, Chief Technical Strategist for Blue Chip Daily Trend Report. So you like Nvidia, you like Freeport-McMoRan, and you like Lilly. So those are three big trends, with AI being the first, and then obviously copper the second, and GLP-1 third. What's interesting is that all three of these areas have had a good run this year, but basically across the broader markets, we've kind of stalled out over the past 2 months. Very strong first 3 months, roughly flat during April and May. So to you, Larry, is this a welcome consolidation, or is it a sign that, we've topped out for the year?
Ryan, thank you for having me on. So I do believe this is a welcome consolidation before we test higher. The first 3 months were fairly strong. April, we had a bit of a pullback, but we've had a nice recovery to new highs, which I think is technically very bullish.
Do you not worry about the macro? We've had some pretty weak bond auctions here of late. It's driving yields up a little bit, and that's happening at a time when there are at least a few signs that jobs and growth may be slowing. Again, depends on whether you think that's welcome or unwelcome. But does the macro concern you?
It does. And I do worry about two things. I worry about bond yields because I don't want to see bond yields break out over 5%. But my biggest concern is inflation. Inflation's really stalled out over the past 4 months. So the Fed's target is 12-month core PCE. In December, that was 2.9. And over the past 4 months, it's only come down 10 basis points to 2.8. So inflation, that last mile has been very sticky, and that is a concern for me.
One of the interesting issues is that if you took out the owner's equivalent rents and some of that kind of stuff that's in there that they don't use in Europe, the numbers would look a lot more pleasant. I know it's like, these are the numbers, this is our system, this is what we do in the United States. And I guess when you talk to people, they still are very concerned about inflation. So no matter what, it's still an issue, right?
Yes, absolutely. And I think the Fed is really dialed into that 2% target for 12-month core PCE. I'd like to see it come down on Friday, but I think until it really starts to come down under 2.4, under 2.3, I don't really see how the Fed could cut interest rates right now.
But if the average wage increases are up around 4%, over time, if inflation's running at 3 and you're getting 4, you're still doing okay, right?
That is the math. But I think the Fed has really dug into that 2% target, and the market is really focused on the Fed.
I think it's great you brought that up because, there's the math. And then there's sentiment, and they cross over, but they're sort of different. You talk about, if market interest rates are up a little bit, yields are up a little, companies are doing fine. Sure, on the math side, there will be, higher costs, but not everybody is borrowing money, and so not every company is so exposed. But then you got sentiment, and sentiment is a little trickier.
It is. Now, the good thing is consumer confidence came in Tuesday at 102. Which was above forecast. So I think the consumer feels good. Their 401ks are probably near the highs, with the markets near the highs. Consumer confidence is strong. But I do think that inflation, I think we're still seeing it in food. We still see it a little bit at the gas pump. So it's mixed as far as the signals. But according to consumer confidence, the consumer's feeling good and they're spending money.
So one of your themes is AI, and in particular, Nvidia. There would be certainly some investors that would be uncomfortable with the rapid gains of late. But you say if you look at the numbers, if you look at the growth rates, if you look at what they're actually delivering, it's not that expensive. State your case.
That's a great point. So Nvidia's earnings over the past 12 months, net income is up 628%. Their revenues are up 267%. The stock itself is only up 195%. So as much as Nvidia stock has gone up. It has not gone up as much as the
It's getting cheaper.
earnings.
It's getting cheaper, isn't it?
You know, it's staying about the same. Here's the growth story for Nvidia. Projected earnings growth over the next 2 years is 59% per year. It trades at a 32 forward PE. So I would make the argument the S&P is projected 10% earnings growth and trades about 21 forward PE. So I would make the argument that Nvidia is at a big discount to the market.
Yeah, absolutely. And that's why I say that it actually feels in some ways cheaper, that forward PE of 32. If you go back a couple of years, it was, arguably around 34. Larry, thank you for joining us. A real pleasure. Larry Tentarelli, Chief Technical Strategist for Blue Chip Daily Trend Report.
Welcome to Blue Chip Daily, one of the industry's premier sources for high-level daily technical and trend analysis. Blue Chip Daily is ideal for both investors and traders of all time frames who want to be on the right side of major market moves and trends. We focus on over 750 large cap stocks, all major stock indices, over 70 exchange-traded funds, bonds, oil, gold, and Bitcoin. Sign up now for Blue Chip Daily, and you will get access to real-time portfolio alerts, premium Twitter page with intraday alerts and commentary, the chart of the day with best idea, daily video and report, and much more. Claim 30-day trial at www.bluechipdaily.com. Subscribe to the Blue Chip Daily YouTube channel for more technical and trend analysis videos and other content.